All right. We're here. Never Broke Again podcast with Dan the Man Chernati. We got to have a nickname. Does Dan, what was your nickname in college, Dan?
I don't know. Like they call me like Chernati, but that's not a very flattering nickname.
Chernati?
Yeah, I don't know where that came from.
So were you in a fraternity?
I was. Yeah.
Which one?
SAE.
Okay, yeah, that's a bad boy one, right?
Yeah, that was fun. No,
that's why you got Chernati.
Probably.
We had a nickname for a guy. His nickname was Herpy.
Okay, I'll stick with Chernati. It's a lot better.
Yeah. So Chernati's, we had some rough ones. So Dan is in Medellin, Colombia.
Sí, señor. Estoy.
Sí. So are you Colombian or are you?
No, I'm Italian.
Italian. So an Italian guy's in Colombia. It sounds like the start of a joke.
Yeah, so an Italian guy goes to Colombia.
What's the rest of it, Dan?
No, I don't know. I love traveling. So, I mean, this past year, I probably spent a total of even the last, not calendar year, but since today, going back a whole year. That's weird. I do this on my screen. It looks different. Never mind. Anyway, it's going the other way. I probably don't know. I spent a total of 2-3 months in the States.
Okay.
I like travel, dude. It's fun.
Are you able to avoid taxes that way? Or
no. I can't avoid taxes, but my business is still stationed in Florida. So all the stuff still goes through Florida. I think if I set it up in Puerto Rico, I know Puerto Rico, yes, it's still a state, but they have very, very cool tax incentives to go to Puerto Rico where you actually wouldn't be taxed on. I forget exactly how they do it. But no, I still do have to pay U.S. taxes, which sucks.
But you're only there 3 months out of the year. That's not a lot. That's like 270 days of traveling.
Yeah. I think there's, I don't know, something in there where you can write off X amount of dollars if you didn't actually live in the States for X amount of time. I haven't really got into it, but my business is still stationed in Florida. So all the money is still being generated in the States. So I think that might, I don't know. I haven't talked to anyone about it, which I probably should because tax season is not going to be friendly.
Yeah. So you're spending how old are you?
29, just turned 29.
Okay. So you still got a
couple years left.
You have the freedom
to
travel.
I do. I enjoy it quite a bit. I've been down here. Yeah, pretty much all over. I just got to go to Antarctica and I'll be at all of them.
What's that?
I got to get over to Antarctica soon. That's going to be my goal.
Do you know that I have a contact for you that you can connect with on how to do that? Because that is not an easy task.
No. So, I mean, that would be sweet. I would definitely take that up because I'll be in Argentina again in a couple months. I'll go down to Ushuaia, which is the most southern point down there. And it's not too far to Antarctica, but it's still not easy to get there.
So how many countries have you been to in the last, I'm guessing you've done this for at least a couple of years now, or?
Yeah, I mean, really since probably for the last 5 years, I've been bouncing around quite a good bit. Even when I was at my corporate job, I was all over Australia, Middle East. And then I did a lot of travel on the other side of the world then. And then now, since I've been working for myself for 3 years, it's the first year and a half was all stateside. But I've been doing a lot of travel to Central and South America. But I don't know. I've been to probably 30, 40, 50 countries, somewhere in there.
Do you want to hit 100 or?
If it happens, it happens.
Okay, so it's just how it's going?
Yeah, just wherever I want to go, I'll get a one-way ticket and figure the rest out later.
Yeah. So where are you staying? In hostels? Are you staying in?
No, I like to think I graduated from the hostel life.
Okay, you make too much money then. That's what it comes down to, because you only graduated if you make enough money.
Well, it's really, especially if you're living South America. I mean, I say decent Airbnbs, but sometimes I do a co-living just because actually I like the environment sometimes of co-living where it's actually just a lot of people that are like-minded, or they got their own marketing business. They day trade, and they did, they make their 5-10K a month, and then they just chill and then they talk to other people. So it's kind of cool just meeting folks at a co-living spot like that. But sometimes I'll just pick up an Airbnb, but you can get a pretty solid Airbnb down really anywhere. Even if you did like something outside Airbnb, it could be like $500-600 a night, or not a night, per month, for like a nice spot in the middle of the city.
Oh, really?
Yeah, but like even the Airbnb life, dude, like it's not that bad. I can get a dope spot down here for like $2-3 grand a month, and like it'd be like a penthouse in the middle of the city. And so it's really too bad. I mean, my rent up in Jacksonville was like $2,500 for a 1-bedroom. It's really not that much different doing an Airbnb down here if you want to say like a pretty nice spot.
Well, it's better because you're in like Medellin, but
Buenos Aires, I can get a dope spot down there for a bit. It's all very affordable, and then also the cost of living is just dirt cheap. I went out last night, went to like a nice sushi restaurant, loaded up on sushi appetizers and a couple drinks, and it was like $30 after tip. Like the same spot.
What is this view? Let me see this view.
That was two of us. And then I went down. I was in Argentina, like a really sweet steakhouse down in it's called Bariloche. It's called Alberto's. If you guys ever go down, let me know. I got some good recommend. But it's a really nice steakhouse, like up at like higher end. I got a filet mignon that brought out 2 fillets, a boatload of bread, a salad, and a glass of Malbec. And after tip, it was like $13.
And this is in Argentina. What city?
That was down in Bariloche, but even Buenos Aires. Well, right now, Argentina is getting some pretty shit going on in their economy, where their dollar's deflating quite a bit. They put like kind of what happened actually in China and recently Canada, actually, where the banks are putting a lot of regulations in terms of how much you can take out of the banks. And as soon as that happens, well, that devalues your currency, because now people can't use the money that they've been saving, they think they had. Well, people are elsewhere. So actually right now the Argentinian economy, not too good. Black market currencies are popping up, even though it's still fully legal tender that you're getting. But like there's black markets for it because people don't want the Argentinian peso anymore. They'd rather have US dollars. So they're trying to offload their stuff as soon as possible. So if you ever go down to Argentina, do not pay with a credit card. Do not pay with a debit card. Do not go to a bank to do an exchange. Go to like a Western Union, or literally just find someone on Instagram and they'll have like people where they'll deliver you money like it's a drug deal, and they'll just deliver you a bunch of cash. Like if you go down there, Andrew, and like, let's say you spend $1, if you went to the bank, they give you like 100 Argentinian pesos back. They call it the blue dollar. So you go exchange it at the blue dollar rate, and instead of getting 100 pesos, you get like 200 pesos. So it doubles your money. And even since I was there just a couple months ago, it went up to almost 300 pesos, which means it's great for Americans, but it's not good at all for people getting paid an Argentinian wage. That sucks. But very cheap. Argentina is beautiful. It's literally like a Europe down in South America. Absolutely gorgeous.
Interesting perspective. I used to travel a lot, so I can remember the US dollar was kind of coveted to an extent, depending on where you were at. But so you would give over like $10 or $100 US dollar, you get 300 pesos back. And then the cost of living is a lot lower there.
Oh yeah, I just got back. My girlfriend and we just got back from coffee just down here. I got 2 coffees. She got 2 teas, and it was like $3-4. Well, I go like somewhere in Jacksonville, you got a coffee. It's like $7-8. By the time you leave $1 tip for a decent coffee.
2 coffees and 2 teas would be probably $15.
At least.
$15.
Especially if you're staying at a nice, not staying, but if you go to a nice, not restaurant, but a nice coffee shop where you can actually work and do some stuff, they're probably going to charge you $4, $5, $6 per coffee.
Yeah.
Somewhere, that would have been like $30. Down here was like $4 or $5. So the cost of living is way cheaper. So if you there's people that come down here just living on Social Security, making $2-3 grand a month, and live large down here.
So you're hacking you got the travel hacks going on, clearly. So but you're selling insurance, because I see your videos on Instagram and they're hilarious, like with the sombrero, and I'm like, what the hell? And you're blowing up. Are you, like you're getting, are these like real likes, or are they we getting bot like?
Instagram is not 100% authentic. Just being real.
Okay.
And
whatever it is, I think the videos are hilarious and educational for what it's worth. I think they're hilarious and educational. So I'm like, this guy, we got to have this guy on.
Yeah, dude, appreciate it, man. I'm following the whole. I don't know why it took me years to figure it out, but it's the whole Gary Vee stuff. Just like give educational, free content out there. You do it and you do it well, it will come to you. And we did it for a couple months, and it's a lot of work getting social media content out there. And
right. How many videos are you doing a day? How many videos are you putting out?
Just like 1-2 video. We just started doing new stuff. So it's working really well on TikTok. Honestly, just posting like a little blurb on a screen, which it makes it look like you just posted a Twitter or something. One of mine just got 300,000 views. I'm like, my goodness, this is nuts. I just literally took 2 minutes to make this. But we're working on getting 2 out on TikTok each day. Instagram, where I'm just putting 1 out a day. But yeah, they're working on at least one, about 4 or 5 original a week. But now that we're starting to get a lot of the content you see, dude, I've actually posted that a couple times.
So could you hire somebody cheaper out there, like a videographer, since everything's so cheap wherever you're at? Couldn't you hire somebody to just follow you around?
Yeah, I am working on that as well. Talking about that, my girlfriend's actually coming in, and she helps me out with that stuff.
You're like, hey, what is my girlfriend gonna do then?
Well, no. So the videography stuff, it's not a matter of just like following. It used to be when I was just like straight recruitment mode. It was following around, like I was, how cool is this? Travel from wherever and do whatever you want, make your own whatever. And that more was like almost like a paparazzi stuff. But here, dude, it's not. I just have like a tripod. I just record myself and just let it rip, and she'll help me actually make the videos in terms of putting them all together, because it takes a long time to make this, between making the script and then cutting all the videos. It's not the simplest thing to get those out there.
So are you getting an ROI? Are you getting some leads from this?
Oh, hundreds and hundreds.
Okay.
A lot of it's coming on TikTok. Yeah, well, we have my account and 2 other accounts, and right now we're feeding about 5-6 agents full time.
So you're posting twice, did you say, on TikTok a day?
Twice, 3 times.
And once on Instagram a day. So do you think that's why TikTok is doing better, because you're posting more?
I just think I believe TikTok's just a way better platform to generate leads. A lot more people are using it for Reels. It's a lot easier to get a lot of views on TikTok, and I just think TikTok's a better platform for that type of stuff.
For what type of stuff?
Business.
Okay.
In terms of generating leads, I see TikTok way better.
Yeah.
At least that has been our experience with it.
So what's the most leads you generated off a video?
I don't know, a couple hundred.
Off one video?
Mm-hmm.
Wow. And that's free. That's basically free leads.
Yeah.
Just sweat equity.
So yeah, it's free. Like I'll have the agents come over, Dan, I want to do what you do. You're not paying for leads. I'm like, yeah, well, it's true, but like it's not really true, because it takes a lot of time and effort. The sweat equity.
Sweat equity.
If you value your time,
it's a grind. It's work.
Yeah, and then they'll start doing it for a week or 2, and then like, oh, this didn't work, and they stop doing it. Like, no shit, it didn't work. It did. If you just went to the gym, Andrew, for like 2 weeks and just did biceps 2 weeks straight, your biceps aren't even going to look bigger. Yeah, well, okay, well maybe you're an exception. But
I just started working my biceps again.
Cool. So maybe you're 100% of an exception. I've been working my biceps for years, and they still look like.
Let's see them. Let's see your biceps. Hey. Good.
But it's consistency is the name of the game with everything. If you're not going to be consistent, I'll even tell people, like, whether it's just being an agent on the social media side, like, dude, if you ain't going to be consistent, just like stop. Like, don't even waste your freaking time like doing this. If you're going to get an insurance, or just stop. Just, just go be a couch potato. You'll literally have better success doing a couch potato than trying to do something for a couple days, a couple weeks, and see if it works.
Yeah, it's tough. I've attempted to do, grabbing old content and then just putting it out there too, and do 2-3 videos, and then you're like, shoot, I put everything out there. I got to make new content, and you're like, okay, if it doesn't hit, it's like, all right, well, it's not hitting, and I kind of get like, I'm embarrassed a little bit, you know. I'm like, all right, like that's kind of like for me. So I'm like, so I slow down. I'm like, am I putting out? I don't know. It's just, I guess I feel like it's a job, right? It's just, you got to do it.
It is 100% a job. See, but yeah, so check out this book, dude. I read this book, and it does a great job in terms of kind of identifying how to market yourself.
Okay.
I freaking love it. It's called Building a Story Brand.
Yeah, Donald Miller. Love him.
Yep, exactly. Yeah. But he does a great job at actually like how to identify people. Like who are you targeting? What are their pain points?
Isn't this the one where they're like, Dan's the hero?
Exactly.
And I'm the guide.
I can never be the hero, right? So on my on like all the TikToks and Instagrams I'm getting out, I cannot be the hero. But dude, if you just look at me like, oh, I got the biggest kahunas around, I'm just so good at what I do, like, dude, you're not going to trust me, right? I want to figure out what your pain points are. I just want to educate you.
You're the guide. You're the guide, right? That's the book says. Exactly. You're the guide, and the customer's the hero, correct?
Yep. It's kind of like, okay. Yes, exactly. The customer is always the hero. You are, Andrew, are always the guide. And we just got to help figure out what someone's pain points are. Pair that up with the $100 million Offers by Alex Hormozi, another phenomenal book here. But he always goes over how to, and I think those two books go very, very well together, because he'll talk about taking someone's like problems and turning that problem into a solution. So like, let's say you want to get healthy, but eating healthy takes a lot of time. That's one of your prohibitors. Well, he sells a solution, how to cook a healthy meal in under 5 minutes. Right, so he's the guide. You're the hero. He's just helping you do that. So I think these two books actually go. It's just
I got. So you're just traveling. You're just like, I'm traveling to wherever. There's no rhyme or reason to where you're going. You're just going.
Well, my girlfriend lives in Medellin, so that's a big reason I come down to Medellin a lot.
Where'd you meet her?
Medellin.
Is she there with you?
Yeah, she's here right now. She's right over here. She just got
back. Have you ever
–
here's a book recommendation. Have you read Blue Zones yet?
No, I haven't heard of that. No.
Go ahead and write that one down.
Let me put it in here. I'm just finishing the 4-hour work week by
Tim Ferriss. Yeah, you're going to like this one better.
What was it? Blue Bones?
Blue Zones.
Blue Zones.
So I would recommend, so they go to this guy, Dan Buettner, goes to, he did research on 5 or 6 areas in the world where the most 100 people live to 100 years old. And he studies. What's that?
Where was it at? Like somewhere in like Tibet or?
So I don't have the book in front of me, but one is in Loma Linda, California, because it was an Adventist society. Then another was, I believe, in Okinawa. And then one was in Greece, Greece. And Sardinia, I think Sardinia. But they go through exactly how, like, the percentages are through the roof in some of these areas of how many live to 100 years old. And then he studies what they eat and what they do. And there's just so many commonalities in these 5 societies. And it's very interesting because you're in Medellin, you probably eat differently. So I think I kind of, there's some similarities there. Like black beans should be like a staple in your diet if you want to have good health and just, cut fast food, cut soft drinks, cut all that crap out. And they have specific meals, what they eat. And I don't know, I've adapted to some of it, but
yeah, that's pretty cool. I'm looking to have some food guidelines and stuff on there.
Yeah, I would be like, go visit these places. I'm the guide. I'll be the guide here for you. I would be like, go visit these. I believe Buettner is based out of Miami. I've talked to him a couple of times.
Yeah, I think I already ate enough meat according to his guidelines for the whole year.
Basically, they're like, eat burritos and black beans forever. You know what I mean? And, cool. Breakfast like a champion, lunch like a pauper, dinner like a prince, like less, like bigger, medium, small, large, medium, small, kind of like.
Yeah.
I don't know. I just kind of see that as the travel. I don't know. I'm just kind of like maybe seeing it.
I try to keep it fairly simple. I just eat and try to get a smoothie in for lunch, a salad, and something for dinner. So as long as I do that, I'm happy.
Well, these will give you more of maybe cultured options, you know.
Yeah.
But if you're near any of them, I don't know if you are. I'd have to look. You probably are. But so give us like one of these scenarios on Instagram that you have that are like I find hilarious because you're like a Mexican cowboy or something, and you're doing and you speed up give us one of these. I don't really understand insurance. You know, I kind of do, I kind of don't. And I honestly I never really cared because I never thought I'd die, you know. But then I started watching yours. I'm like, this guy's making it funny. So I started listening. I'm like, okay, maybe there's value here, but my attention span is really short.
Yeah. So insurance, right? There's a few different types of insurances. You got what's called a term policy, right? Which is the cheapest way to get a boatload of coverage in place at the end of that time. It's done. You know, some people employ a strategy, buy term, invest the rest. I ain't saying there's anything wrong with that. I currently have that myself. How I look at it, you know, like market accounts versus a life insurance is a retirement tool, because there's also what's called permanent insurance, that's where I do most of my business through. You know, your typical market accounts, it's like riding a roller coaster.
Do you have these? Do you own one of these as well?
Yep, I do.
Okay.
I have my own personal investments, and I put about $3 or $4 grand a month into also cash value life insurance as part of my retirement tool as well. So obviously, I am not a financial advisor. So if anyone's listening to this, please don't take it financial advice. Go talk to Josh and Andrew on that side of things. But here's just personally what I do. If the market's always fluctuating, that's where I'm typically going to see the big gains on any type of market account. That's my growth strategy. For me, my cash value life insurance is going to be more like my steady growth. You know, I'm not expecting to blow the smokes off the water with it. It's literally acting like my savings account on steroids. Dude, a bank eats your money alive. If you just keep money in your bank, you're just pissing away money every single day, because they're giving you like 0.01% return on your money, which you have to pay taxes on. So even if you have like a boatload of cash sitting in there, it gets you and the family enough to like get a medium pizza pie at the end of the year. Yeah. So that's where the cash value really just helps. Instead of putting it in my money savings account, I dump my extra into cash value life insurance. So
we have term. So we have term and cash value. Those are the two options.
Correct. So at a high level, so you have term over here, and then you got what's called permanent insurance over here. Inside permanent insurance, there are two basic types of insurances. You have what's called an indexed universal life policy, and you have a whole life policy. Whole life, if any of you guys are on here and you're looking at using whole life for a retirement tool, make sure you use what's called participating whole life from a mutual company, not a stock company. Mutual company, what that means, Andrew, is that the policy holders are the actual shareholders. So the earnings go back to the policy holders. If it is owned by a stock company, meaning it's like publicly traded, well, their shareholders are investors. So their primary duty is to serve the investors. So I always like working with mutual companies, and really on both sides of the scale. But that's where whole life typically comes in. Whole life, you're pretty much going to be guaranteed, 3 or 4% growth. So there's a little bit less growth on it, but it's pretty much guaranteed. Like you're pretty much locked in. You still have your cost of insurance in place. In IUL, that's what I personally have myself. It is linked to what's called an index account on the growth side of things. So the money's going to be linked to some type of index, not invested in it, but linked to it. So it has more potential for growth. And it comes with what's called a 0% floor. So like if the market's tanked like they did right now, we didn't make any money. You didn't lose 20, 30, 40% potentially of a portfolio. You still have your cost of insurance in place. Like it still does cost to maintain the policy, where if you ever get sick, like if you ever got a stroke, heart attack, cancer, liver failure, kidney disease, there is a payout to that as well. And obviously the death benefit, always tax-free to kids or to whoever your beneficiary is. But kind of how I look at it, if you had like a seesaw right here, and you had death benefit on this end, and you have cash value on this end. Some people have with this, all death benefit, no cash value, term policy. If we kind of met somewhere like this, you still have a decent bit of death benefit, little cash value. Imagining you're putting in the same amount a month. So and let's imagine, Andrew, that you're putting in $1,000 a month, and you just push the death benefit as far down as we can legally go. And then most of that $1,000 is going to go to the cash value growth, because now your policy is a lot less expensive to maintain. You're putting in the same amount, but your policy is a lot less. Like you don't have that much death benefit. So most of that $1,000 will now go towards the cash value. And that is typically the types of strategies that we employ. And it's not meant, again, to blow the smokes off the stock. It's not meant to outperform it. It never will. And this is not an investment legally. So that's pretty much how, in a nutshell, how it would work.
Well, here's the thing. I've got friends, and wealthy friends, right? And they talk about infinite, I think it's infinite banking or infinite life insurance. And they swear by this methodology. And it's nothing I'm like, all right, it's just something I don't know, really. So is that what IUL is?
So very similar. So true infinite banking is done through what's called a participating whole life policy, because you're typically guaranteed the gains on the account. And then when you take the money out, it's kind of just a wash, So IUL is not true infinite banking, but it works very, very similar. So like, let's say you had it kind of very similar to like a securities-backed line of credit, right? Where you can take the $50K out of your securities account at a very low interest rate, but the money's still growing inside of the account. So like, let's say you had $100,000 sitting inside your life insurance contract, and you took out $40,000 from it. Boom, you put $40K in your bank account. Well, you're not taxing that $40K, right? Because you took a loan out against it, just like if you did a cash out refi on a house. Mm-hmm. Boom, you got that $40K in your account. Right now, let's say the loan rate can vary based by company. Sometimes it can be 1.5%, sometimes 4%, 5%, 6%. Just depends what company you're working with and the structure of the loan. Let's say right now it's 4%. Let's say the cash, that same 30, 40K, whatever we're talking about, is still sitting inside your account, accumulating interest. If it's inside of an IUL, it could be anywhere between 0% to 15%. Or higher. It just depends the strategy that we employed. So your money is still sitting inside the account. Let's say it's growing at 7%, the loan's at 4%. So instead of making 7, you take the 7 minus the 4, you're still up on average. And this is, again, very oversimplification, but you're still up a couple percentage, even though you took the money outside of the contract.
Right.
So that's how I personally use it. Here in a couple of years, I'll be able to start buying, Airbnbs pretty much every single year out of my insurance contract, because the money's still on average sitting inside the account, accumulating interest.
Right. So you said it's making 7. Is that fixed, or is that?
No. So if you did like inside of a whole life contract, it will be more fixed. So whole life will be less growth, more guarantees. Anytime you typically guarantee something, you're going to have just like if you do like a treasury bond or something, right? It's low growth, low risk, lots of guarantees. The more time you typically guarantee anything, it's going to have less growth, because whoever's guaranteeing it, they got to cover their ass. So whole life.
What's the highest guarantee available?
Yeah, highest guarantee. It's good. I don't know if I know the answer to that one, but
what do you think it is, or do you have any idea?
So on an IUL, there's the highest guaranteed you could put it to. Sometimes you can do like a fixed 4 or 5%, where boom, that is now fixed at 4 or 5% growth. So you can do something like that. I don't know all the companies and all the different ones out there. Whole life probably going to be somewhere similar around 4, 5, 6%, almost fixed rate growth on that. And it just depends. It can also vary in terms of how it's structured. But that's probably where you're going to see the highest growth. The IUL, you typically want to, they'll have floors in place. Like how low can the money go? So that'll either be 0%, 1%, 2%, could be 3 or 4%. Just the more, again, guarantees that you put on it, they typically also put what's called a cap on it. How high can you go? So let's say there's a cap of 9%. Well, if the markets went up 20%, you're capped at 9. You see 9%. Yeah. So if you're putting more guarantees in the floor, the cap typically goes lower. Just because now, even when the market's down, they're still guaranteeing you.
So where does the money go that I'm investing?
So your money is never getting invested. Well, you are never investing the money. And so the insurance company will take the money, and I mean, they are professional investors. They'll probably do calls, puts, shorts, different option trading. So they're pretty much doing the same thing the bank does. They are professional investors. The bank, your money to the bank is a liability. If your money is just sitting in the bank, well, the bank's got buildings and staff and everything they're paying. They ain't making any money if they're not doing something with it. Same concept is true inside of an index universal life. They'll link your growth to a specific index account, like an S&P 500, but your money is never actually going inside the S&P 500. Your growth will be attributed to some performance of an S&P, but it's never truly actually getting invested in the S&P 500. The insurance companies, they're professional investors. They're doing whatever they do best and making a lot more money off the money that you give them.
Well, that sounds like they're running a hedge fund.
If I said yes, I'd probably lose my license to that. I don't know, to be honest.
Right? I mean, that's what it sounds like. I don't know.
To be honest, I know they do shorts and options. They're literally professional investors with money. So they're doing whatever they do best and making if they're giving you 4 or 5%. Well, they probably made 15, 20%. Off that, gave you 5, 6.
Right. Interesting. So people buy these policies. So you do the scenarios. You're like, here I'm 42, Dan. Are you able to pop off a scenario for me, or do you need to do research? You know what I mean? Because I see you do these with people, and they're like, "Hey, give me a scenario." They give you age, and what else do they give you? I don't know what else.
Age and how much you want to put in a month.
What's the maximum?
Maximum? There really is no maximum. I mean, we have clients that'll put in a couple $1 million a year.
Okay.
And once you get into that sphere too, there's actually really cool stuff you can do in what's called premium financing, where if you're putting in $100,000, let's say a year, a bank will step in and put another $900,000 in. So your cash value is exponentially growing. And there are creative ways to also make that friendly on tax time too.
Wait. So why are they allowing that much leverage?
Banks will do it. It's called premium financing. It's very similar to what's the whole process is going to be very similar to a closing on a house.
Yeah. So if I invest, if I'm all right, I'm committing $100K a year, right? Mm-hmm. The bank you're going to facilitate a bank step in and push another $900,000 in chips into my account.
Yep.
And then what?
And they'll do that for let's say the first 5, 6 years. So that way your cash value is now growing off of a heck of a lot more money.
Right.
Now it's growing off your money and all the bank's money that they're putting in there. So obviously there's going to be some more nuances in there. You got to post some correct collateral typically for it as well. They got to make sure that you're good for the money. There's also ways.
What kind of collateral are they looking for?
It all is going to depend based on how much they're leveraging, how much you're leveraging. So it'll depend. The guy he had to post $230K this first year, and it'll go down over time too. But it's pretty much the difference between the loan and what you have sitting there in cash. Typically after 5, 7 years, there is no more collateral that needs to be posted. But those are also pretty cool. You are getting a loan from a bank, right? So we got to make sure it's very structured properly at the beginning. But if you're a business owner and you're putting that $100K, there's also creative ways that we can legally have the $100K come off. You're not going to get taxed on the $100K.
So I'm investing $100K into which policy? Term, permanent, or IUL? And then I got whole
investing when it comes with insurance.
I've got some choppy notes here.
Yep. So it's never legally called investing when we talk about insurance.
Okay,
so
what do I say then?
Yep. So, dude, it's so weird. Investing. But it's let's say you're putting a couple grand a month into.
Well, I want to go off this $100K idea, right? Yeah. So if I contribute $100,000, do I do that monthly or do I do that at one time?
You could do so. That would be how this client set up. It was annual.
Okay. So if I contributed $100K, the bank is going to give me another $900, and then I get guaranteed gains. I get guaranteed 5% off the $1 million.
Still not. I mean, you can make it guaranteed, but again, more guarantees, less growth. So
right. I'm 42, so I'm more risk averse, right?
Yep. So we might look at, if you don't really like that much risk, we might look at something more like a whole life contract. That is not my wheelhouse.
What is your wheelhouse? I want to go to your wheelhouse.
Mine's going to be an indexed universal life contracts. So,
okay. So put me in one of those.
If you were 50, 55, we get on the teeterings, do we want to go whole life or IUL? How I look at it is if you got like an XY axis, and let's say you got, this is down here is risk. Over here, we got growth. Now, if you have something up here, like way out here, this is going to be like stocks, higher risk, high growth. And I'm not saying risk is only as risky as the shit you don't know. So for folks like you and Josh, this ain't risky over here because you guys know what you're doing. For Joe Schmo that's just throwing random money away, like, okay, cool. He's like, I couldn't go buy a business like Warren Buffett does right now. To him, it's not risky, but to me it is. But you got stocks, bonds over here. There's not bonds, stocks. Over here, you got like just bank accounts, very low risk, low growth. Whole life's going to be more on this side of things. Very lower growth, but also very low risk. And IUL is just slightly over on here. Slightly higher risk, but also higher growth. Still, I wouldn't classify it as a risky vehicle unless you got to make sure it's set up properly. That's one of the bad things, Andrew, where sometimes agents, they don't know what the F they're doing with these products, and it can be bad. It's all matters how we set it up at the very beginning. Like if you're getting a boatload more insurance than you actually need, like that's no bueno. But let's say you were doing.
What about the premium financing that you mentioned? What is that?
That would probably be a little bit more to the right of an IUL.
Well, what is that following? Is that term, permanent, or IUL?
Oh, that's going to be IUL. I
Okay.
believe you might be able to set it up with that. Again, when we get that high of cases, I typically put that to like the folks that deal with millions of dollars of cases typically. But you need all different software for that. I typically work with folks that are putting anywhere between a couple hundred a month to a couple thousand. That's going to be my more middle to upper America. And then once we get to folks that are putting 100, 200K a year, that's when we bring in some very higher end folks to figure, hey.
Is that where John would come in? John, our buddy John? Or is he
No,
is that still?
No, he's going to be more whole life, term life in terms of like buying leads, making phone calls. When we get to, there is another John, but not the same John that you are thinking of.
Got it.
Yeah.
All right.
And then,
so
let's say you're putting in $2,000 a month.
Okay, fine. We'll settle. We'll settle at that. We'll settle at that. Go ahead.
And whenever you guys are looking at IULs, we typically want to use what's called an increasing death benefit as well, Andrew. What that means is your death benefit is way, way lower at the beginning, but it's going to step up every single year. Typically, that is what we would want to do. Inside of an insurance contract, you can create what's called a MEC. So like Andrew, let's say you only had $1,000 of death benefit in place and you're putting in $2,000 a month. Right off the bat, you're going to create what's called a MEC. It's a modified endowment contract. In layman's terms, that means you just turned your policy from being tax advantaged under tax code 7702 to now it's taxed as an investment. You're going to be paying taxes on the money that you take out from it. We typically want to avoid that. So there is a minimum amount of insurance we have to get in place. With the increasing death benefit, what that does, it pretty much almost makes your policy an investment every single year, but it doesn't actually let it do it. So you're always putting in as much as we can in terms of the policy. So let's say you did something like that. And let's just say you put into it until you are, let's say 20 years. So let's say you put into it for 20 years. And there's one company that we work with that's pretty cool. You can turn on what's called a lifetime income benefit, which pretty much means you're annuitizing your policy, meaning you're going to get a guaranteed tax-free income stream for the rest of your life. Like you literally couldn't outlive it. Not that it'd be anything crazy here, but let's say you paid into this thing until 20 or for 20 years until you're 61. You'd be projected to get roughly $55,000 a year tax-free for the rest of your life.
Okay. So, and how much do I have to contribute a month to do that? 2,000 a month?
2,000 a month.
So $24,000 a year for 20 years.
Yep.
So what does that come out to?
480K.
So that's only 480. 480.
Yep.
Okay, so that's a little over 10% compounded over 20 years. That's good. That's pretty good.
So yeah,
Okay.
it's not meant to blow the smokes off of anything else. It's just a way to that you can still see a steady growth.
So do I get the 55? Was it 50,000 or 55?
Right around 55. So and they illustrate the growth that 5.7.
Do I get it immediately? Do I get it? Do I get it over time, or do I get it only at the end?
You could get it however you want, however you would structure it. So if you wanted to get it every month, you get it every month. If you wanted to get it every year, they'd write you a check for every year. Really, however you want to structure that. And then it's since you're taking money out via loans, that 55K is all tax free as well. So you're not paying taxes on that. It's not reportable income. Loans are not income, so you're not reporting taxes on that 55K either, which can help a lot come tax time. Because if you're actually making too much money, reportable income, when anyone goes to retire, up to about 85% of your Social Security will now be taxable income as well.
And this is called what?
This would just be called an indexed universal life. But whenever you're doing it, there's many different ways to set up an IUL. This would be you max fund it. What is the most amount of cash value that I can generate, and what is the least amount of insurance that I can get? For example, here, dude, you'd only have like $450K of life insurance in place at $2,000 a month. People are like, well, damn, that's not a lot of insurance. Like, no freaking shit. We don't want that much insurance in place, because if you had a $2, $3 million, $4 million death benefit, it's a lot more expensive to maintain that. So a lot less of your money's gonna go to the cash value. We want as little as possible. Sometimes people want to kind of meet in the middle. Yeah, it just depends where we want to go. I have a lot of folks that want to kind of meet somewhere in the middle. They got a family, they still want some death benefit in place, like a little bit more than 200 grand. But it really just is a case by case basis based on what someone's goals are. And sometimes we'll even link it up with the term policy. Hey, you only really need a lot of death benefit for the next 10 years. Your daughter's 12. In the next 10, 15 years, she'll be out of the house. We won't be financially responsible for her anymore. So let's just put an extra, 10, 15-year term policy in place, get an extra $1 million for like $70, $80 a month, if that. And so that way your insurance is covered too. So it really just depends all based on goals.
Dude, it sounds good. It sounds like a good deal. I got to probably look into this more with you. But so what are you looking for? Are you looking for clients? Or are you looking to recruit agents? Or are you looking for both?
Dude, I used to be full of recruitment mode. Honestly, not anymore. Now, dude, I just kind of go off the Al Capone. I'd rather have 4 quarters than 100 pennies. And as soon as I started doing that, focusing on more of the process, the folks that we're bringing on board, and just really training them up to speed. Like I just spent a couple weeks in Mexico with my cousin. We did a lot of one-on-one training. I'm onboarding another one of my friends right now.
So you're quality over quantity. Is that what you're?
Yeah, dude. And as soon as I started doing that, the income freaking went through the roof. Really focusing on one person.
So then what are you doing with all those leads? I'm sure some of them are not good, on TikTok. Are you passing them on to your people, or are you actually reaching out?
So I'm working on getting myself out of the field here. Not because I don't like doing it, but because I want to help other people, experience what I'm experiencing. It still is a very, very cool product. And just for your reference, like let's say you were putting in $2,000 a month, so that's $24K for the year. How you structure these things means everything. If I structured it like a bozo, and it wouldn't be that bad in terms of the long run, but my payout would have been like close to 17, 18K off that. How we structure it this way, yes, you're putting in 24K. My total payout would be like $6,000, $7,000 if you're putting in that one time upfront. That's it. That's my commission. That is it. There's no residuals in terms of my end of things. Mm-hmm. But so we're working with some pretty cool stuff. It's very freaking cool for the clients. So I feel like I'm really giving back a good service. And then I do get taken care of well, being that I work with more middle high-end folks. And we have a boatload of freaking leads coming in now, dude. Like we put a lot of time and effort on marketing. So that's where I got to credit most of it to is our marketing strategies that we're using. It's kind of like if you went to a restaurant and if they price the first bottle of wine on the wine list at $1,000, you go down and find the $100 bottle of wine. You think you got it. Boom, we got a deal. This looks good. But if they price the $21 first, you get to that $100 bottle of wine, you start thinking that $100 is expensive. So it's all psychology. We're working on, targeting folks that are more middle, upper income. It's an easier clientele to work with. I forget what.
More quality over quantity.
Yeah, dude, 100%.
So let's. So Dan is with First. It's called First Family Life.
Family First Life. I got most of my contracts through them, and then I pretty much run my own agency out of it called the 360 Financial Group.
We got to get it to be 369.
I was thinking the same thing in my head. Dude, it's so funny that the day after I started working with you guys.
Let's go.
Flying down to Puerto Vallarta, and
hey, me, you, and Josh are gonna have to have a call. We're gonna have to have a call.
The address I walked into, dude, like literally right next to me, it just said 369. I'm like, shit, man, this is funny. And the barbershop.
I remember that. You sent us the photo. We need to talk about 360, 369. We'll have to do a call. All right, let's. So Dan with Family First Life, and Dan Chernati, and look him up. I know you're on Instagram. Are you on Facebook or anything like that? Or
I should be on all the platforms. Just I think TikTok and Instagram is D.
Oh yeah, you love it. I love your videos. I think they're hilarious. That's where I need to listen to it more. I need to put some more time into listening to it. But it sounds like I might need one of these IULs. And then we got to also talk to Josh and see if we can figure out how to make some money with you. But all right, let's any words of wisdom here from Medellin, Colombia?
Oh, I can give you guys tons of freaking wisdom on traveling, dude. I was literally thinking about getting some stuff going. There's like a little travel agency or something. I don't know, agency or just tips and tricks when you travel. I don't know, dude. People in the States are very freaking narrow-minded. Like some of the most narrow-minded people I ever met. And I love the people in the States. That's where all my folks are, my friends and family. But the most freaking narrow-minded people out there, outside of probably North Korea and stuff. And I don't say that. I love the country. It still is land of the free, and I freaking love it up there. But the more you hear a bunch of shit about South America, and no, it's not that bad at all. It's like more liberating down here, and I think, and more friendly down here than it is. Obviously,
traveling's the best. I traveled a lot in my 20s. I've been to about 75, 100 countries. This is some of the best times of my life. Yeah. I travel with my cousin, Lee. He's a very well-known travel guy. We're going to have him on the podcast. I'm going to send you that episode too. He's the one that's been to Antarctica, all 320 countries. One of the youngest backpackers. I think he got surpassed, but he was he was the youngest backpacker at a time to hit every single country. He did it by like 32. But all right, we're going to put your info out there and reach out to Dan. He's the hero. He's the IUL hero.
I can help you. Yeah. That's sweet, dude. Hey, I appreciate you having me on, man.
All right. Thank you, Dan. Catch you later.